Hello and welcome everyone to the Commodity Report for the 25th of November 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So firstly, happy Thanksgiving to everybody. And of course, as we now transition into Black Friday, we have been gifted with a Black Friday sale on commodities as well. So as you know, we have been selling into multiple commodities here, benefiting from the cascading sell-off to the downside that we have had over the last week here. Everything from platinum, of course, to gold as well. We've booked over 1,000 points at the beginning of the week on platinum, booked over 300 points on gold. Those trades are still running in a nice amount of profit. They're all protected as well. We took the opportunity, of course, the previous week to flip net long into palladium. That trade delivered 3,000 points just within 4 sessions. But as we get towards the end of the week now, transitioning in, of course, to the beginning of December, going into next week, we are now setting up for some huge opportunities, further compounded by the fact that the minutes of the FOMC showed that the Fed are now looking to pivot. So with that, as we head into the month of December, this comes back to the point that JP Morgan, Goldman Sachs, Bank of America, Citigroup have been stating and banging the drum to their clients that the end of year could be one of the most profitable in history for trading commodities, with a supercharged rally to the upside off the back of the Federal Reserve starting to pivot, being less aggressive on interest rate hikes. And with that, we could further then see the European Central Bank and the Bank of England and other central banks around the world follow suit. And this sets up, of course, for a huge rally in the commodity markets. And right now we have oil prices that are broken down $10 to the downside in the last week. Platinum prices, they're broken down over 1,000 points in the last week. Gold prices are broken down over $60. We've seen silver prices, they're broken down over $2. So all of this sets up for some huge opportunities here as we see the usual end of month outflows at the end of November, then transitioning into December. It is going to set up for back-to-back opportunities here between now and the end of the year to hit the ground running as you move into 2023. Some huge opportunities to benefit now that we've had it confirmed from the Federal Reserve, from the minutes of the FOMC, that the Fed are now looking to be less aggressive moving forward on their interest rate hikes. And as such, the chances of the Fed now going ahead with a 75 basis point rate hike, as they've done so previously at the last 4 FOMC statements, has reduced now all the way down to just 10%. So this could set up for some huge, immense opportunities for you to trade impulse moves with commodities as we go into the month of December that you absolutely do not want to miss out on. You have to consider that in the last week, gasoline prices, they're broken down 10%. Brent crude oil, WTI crude oil, they're all broken down over 10%. We've of course seen multiple commodities all under pressure in the lead up to Thanksgiving for the Black Friday sale that we're seeing at the moment. And of course, going into the end of the month, this is going to provide further opportunities to position yourself massively in your portfolio to have a strong end to the year and maximize it and hit the ground running as you move into 2023. And with that, this is the time of year to ditch those outdated technical analysis strategies and gimmicky technical indicators that by now you can see are not working for you in these data-driven markets. You want to be utilizing a research-driven approach to the market, utilizing data, statistics, market intelligence. As you know, 1 in 2 people have now turned to trading to beat inflation. If you want to earn more, you have to learn more. This is where you do want to be understanding and learning the daily, the weekly, the monthly, the quarterly, real-time data-driven cycles for each commodity. Further compound that as well with the knowledge and understanding of how the hedge funds, money managers, banks, commercials and hedges in the market are positioned in real time. Understand the key areas of liquidity that are targeted. This will help you massively to get precision with your entries and your exits at the right time of the cycle to manage your portfolio. And of course, alongside that, understanding the intermarket correlations, the fundamentals, the macroeconomics, the importance of central bank news items. We've obviously just had a massive signal from the Federal Reserve, from the minutes of the FOMC, regarding the pivot that they're looking to do, much less aggressive rate hikes moving forward as we transition into 2023, which, if you know what you're doing and understand this, can provide you with huge opportunities to capitalize moving forward. So with that, if you would like to join our professional mentorship program, learn the professional research-driven approach to the market and join our community of successful traders, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.